Good afternoon. This is Brian Split with Allendale here for your closing commentary for Friday, June 10th, 2011. And we did have some mixed trade today in the grains. Really the strongest market today was the July corn and July wheat, and really at separate parts of the session here. But as far as how we finished up, July corn was up 1.5 pennies today at 7.87, and that is up 33 cents for the week. We did have December corn down 1.5 here today at 7.12.5, and that is up 26 1/4 for the week. As far as soybeans, mainly lower trade here today. Most rallies were sold into pretty aggressively. July beans ended up down 6.5 at 13.87 1/4. That is 27 1/4 cents lower for the week, while new crop November soybeans were down a nickel today at 13.81 3/4, and that is down 15 1/4 on the week. As far as the wheat market goes, awful lot of spreading today. The July Chicago contract was very firm, up 14 1/4 today at 7.59 1/4, although that is down 14.5 on the week. The July Kansas City contract down 3 1/4 today at 8.68, down 46 1/4 on the week, while the July Minneapolis contract down 20 3/4 today at $10 even for settlement, which is actually down 60.5 for the week. As far as how we opened up out of the gates, a lot of spreading right off the bat. Some very aggressive profit taking in the corn-wheat spread, with the July Chicago wheat rallying very aggressive early, moving as much as 20 cents in that spread in the favor of wheat, just to have the market go back to about where it closed yesterday, just to go back to gaining about 13 cents in the favor of wheat by the end of the session. So a lot of movement there. We're seeing the idea of very tight old crop corn stocks versus the idea of potential increase in demand from the feed sector for wheat, along with freshly harvested supplies on the horizon here, all culminating in quite a bit of volatility there. So that's a spread to watch, as this volatility is fun to look at here. But other than that, we still have rainfall and flooding as an issue in the Midwest. We're going to keep an eye on that. Something else that we're watching is the idea here with wheat that the feed mills in China do seem to be using more wheat as a substitute for corn as well, with corn quite a bit higher price. So all in all here, the soybeans really had a bearish story yesterday. We had a very bullish corn report, and soybeans had an ending stock number that was bigger than what the trade was looking for. So all in all, these November soybeans have traded over $14 a handful of times, but just cannot muster a close over 14. So it seems at this point that's something to pay attention to. If you're looking to sell beans, $14 is a potential target. 14.11 1/4 is the current contract high, so that's going to be a point to watch there. But if we do get a close over $14 in this November contract, we may see some more speculative interest come in there, so something to pay attention to as well. As far as some of the outside markets, the meat's a little bit mixed today. We did have some strength in the nearby hog contracts. Again, spreading featured there. It looks like the June was up 122 at 91.67, and July up about 15 at 93.12. But if you look at the fall contracts, most of those down about 30 points here today. South Korea is doubling their tariff-free pork imports, and with the U.S. being the leading exporter to South Korea, that is friendly news for the pork market. There's also talk of some higher cash trade to come next week, and something else is the cash belly market has also been moving up here, and that's been a drag on the hog market recently as well. On the cattle, a little bit different story today. We did have some sharp losses today. The June and August contracts both down about $2 at 102.62 and 103.42 respectively. Pressure from the outside markets today, a little bit of macroeconomic selling, and just ideas. You've got cash beef at the lowest level in 3 months here, and that's keeping some bearish psychology in those markets. But as far as the big picture stuff today, stock market futures and the Dow down about 140 points, S&P down 13, and NASDAQ down about 20.5. We did have crude oil dip back below $100 a barrel here today, down about $2.65 at 99.28 was the last I saw. And again, we had some friendly news that OPEC was not going to increase production, although Saudi Arabia is going to do it on their own by the tune of about 500,000 barrels a day. And really, this crude oil market's been stuck between $95 and $105 a barrel. So it seems if we violate one of those areas on a closing basis, we can maybe expect that market to continue in that direction. But until we see that, this market's still in a sideways pattern at this point. Gold down about $10 today at $15.32 an ounce, and silver down $1.10 at $36.32. That is your closing commentary for the week. If you have any questions, please give us a call here at 1-800-2MARKET. That's 1-800-262-7538. You can also look at our research online at www.allendale-inc.com. And good luck trading to you next week. Thank you.